chat. Welcome to the UTG show.
Comparing, right? GME and root, very, very similar structures, right? Um, they both came through a previous lower high into a um, redistributive range with some stop loss hunting included on it. Continued its way down, found its base, made a little accumulation, right, in both. And then it broke the range, came back and tested the previous area, right, of interest where that stop loss hunting occurred, right? Ultimately, ran into it and then failed, right? Now, a couple things, right? So first of all, after rejecting, right, we now created a new supply box above us. So you can draw that from the wick down to the body of the following candle, right? So on the supply, it's the top side of the candle. If it's a demand zone, like on the 4 hour here, right? You drop from the bottom wick up to the bottom body of the next wick, and then draw it over, right? That's your support zone, your demand zone. Um, so that is our range, right? And then very similar, right, um, to root here. And I'm not sure where my just refresh it quick. There it is. Sorry. Okay. Um, so back to where we were. Let's get us back on track. Okay. So looking at our current structure here, and we'll pipe Jimmy down also to the same time frame, right? After we drew both our top supply box and our bottom demand box, right? And I will, this is the same, right? These are your purple boxes, right? Um, just to make it visually more representative. Um, and we'll change this to red just for easy comparison use here, right? So it is important, especially now that we've drawn this demand zone box on the 4 hour. I mean, this was the original spot, right, where we, out of this accumulation, we broke out of it and then used this zone to back test and use that as a launch pad to then go an additional almost 15%, right? And so we're back at that spot to retest buyers in this zone to hopefully again use it as a launch pad to go up once more. That's why it's super important to me that we maintain this zone, because if we don't, that means we lose it and we now go back to this garbage. And so just knowing the fact that we lost what was once an easy zone for buyers to take over and launch us up 15%, that's very scary to me. And, even if we were to get a double bottom, right? After that, we just might come back test that same area and reject and go down further, right? Um, so what could be, right? There's the main problem that people have is understanding if a uh, uh, reaccumulation is a distribution, right? Um, And so the same concept is here, right? If we don't hold this box, it could very well turn into a redistribution and go lower. Even if you get an automatic reaction, man, this thing could even go up to 25 and reject down because we know we have big, heavy resistance, right, in the past from that. So I got this box here. But even if you get that, then you would potentially look at making lower lows yet at this point. Um, and so that's why, to me, it's imperative to hold this box and use it how we once did to finally break through and validate the back test of the macro spring, right? And so in the next coming days, right, all that I'm really caring about, right, is the two boxes, the top supply box and this bottom demand box, right? And so, comparing even root to it, right? We had the same gap down, right? Now we're kind of in this accumulative range, right? It even looks very similar, which I think is hilarious. Um, and so, assuming this is your SC, right? Same thing here. You have your automatic reaction here. You have your ST, right? ST. Here you had a uh, just another automatic reaction, but you're still in the zone, right? Here. And so then you go down, right, and then you create the ST in phase B, which creates a new lower low prior to the previous low, right? That would be this guy, right? And so knowing that we started seeing, if you look at the volume, even on 15-minute, like once we hit this zone, right? Look at the volume pickup, right? You have expanding green volume now once we hit this 4-hour demand zone box, right? And so it would make sense that we would find support there, and we should see a reaction if this indeed is the ST in phase B, right, on the accumulation schematic, right? So we should see some type of reaction here. Now, whether it hits the middle of the range and then we end up getting, the spring, maybe it comes all the way back up to the top of the range and it, pukes down. I don't know, but until it makes a move outside of the box, whether it is an accumulation and we hit the SOS and we continue higher, or if it breaks down and this is just a redistribution pattern, then you're looking for that double bottom at 20, 19, 18, 17. Clearly not ideal, but in the coming days, right? We know that insiders' window to buy is open, right? We know a price is compressed in this zone, right? We know IV is also low. Those are the pure characteristics for the big dogs, hedge funds, institutions, insiders. This is the prime time for them to load up, and they are. They are doing it quietly. You're not going to see 30, $40 million orders coming across the dark pool. You're going to see a bunch of tiny orders, 100,000, 200,000, 300,000, where it's going to look like a drop in the bucket. Like that's how they do it. They want to load up quietly, right? And so that's something to pay attention to in this range. But for the rest of this week, I don't really care as long as it continues to consolidate in this range, and maybe it does the same thing, right? And we get one little push for the spring before we attempt to break out of this range, right? Which it did. It hit that SOS phase and then it tested the BULPS, right? It actually came back down and just a little bit even past the previous high, but it actually tested the mid range, the regular LPS for buyers once more. And that was probably a stop loss hunting trick as well. Um, and so on Root, it actually went all the way back down there before it had its final launch back up to where we were, right? Back up to this previous boxing, the big blue box that we had identified, right? And so it ultimately came back up to that range and it's been trying to push through it, right? There's clear sellers trying to absorb here, but eventually, right? Here's where the earnings hit and then it just took off, right? But right now, this is all that I'm kind of paying attention to. I'm not worrying. I'm buying shares and I'm buying 28 leaps in this exact scenario. There with the price action and IV being the way that it is, it's really difficult to make a lot of money right now. I wouldn't suggest any type of weeklies, um, just because it's gonna be hard, right? The really easy thing and what even the hedge funds are doing are probably selling your calls and your puts outside of, this range, right? Probably above 23, 24, and probably below $28, it's not a lot of money, but it's probably what they're doing because there's really no other option. But this is what I'm looking for, anyways, in the next week. And potentially, it continues on into the following week. But and maybe it's just a couple days. I don't know, right? I'm gonna continue to keep track of this, little accumulation pattern here. Hopefully, time the range in the spring. Um, maybe we do it in 2 days. I don't know, but I'm just going to continue to look at this, continue to monitor volume, right? I want to see as we hit these lower lows, like look on Root here. As we hit these lower lows, we started to see expanding green volume, right? Into the spring and into the back test. It's great, fantastic. That's what I'm kind of looking for right now on GME if it were to continue to do this round into the spring. Um, that's all I got. So I just didn't want to explain it a bajillion times in the chat. Here's a video.